comprehensive market overview, gradual gains amid anticipation of policy shifts. In today's trading, U.S. stock markets showed modest yet promising advances, suggesting a cautiously optimistic outlook among investors. The Dow Jones Industrial Average increased by about 0.3%, gaining roughly 100 points. The S&P 500, maintaining its upward trajectory, also ascended by 0.3%, marking one of its most robust three-day performances of the year. The Nasdaq Composite, although more subdued, managed a 0.2% rise, reflecting continued faith in the tech sector despite broader market uncertainties. This upward movement in major indices can be largely attributed to the growing belief that the Federal Reserve might lower interest rates in response to recent economic indicators. The Goldilocks jobs report, neither too hot nor too cold, has been pivotal in shaping this belief, providing just the right balance to fuel hopes without triggering inflationary worries. Coupled with positive remarks from Fed policymakers earlier this week, there's a palpable sense of anticipation that monetary policy might pivot to support further economic growth. However, not all sectors shared in the day's general optimism. Notably, Disney shares experienced a downturn, even after reporting a quarterly earnings beat. Disney, a bellwether for both the entertainment and media industries, illustrated the complexity of market reactions to corporate earnings. Despite winning a significant proxy fight with activist investor Nelson Peltz and achieving profitability in its direct-to-consumer streaming operations for the first time, the company's stock suffered due to its cautious outlook for the coming quarters. This includes concerns over the performance of its streaming services, particularly Disney Plus Hotstar in India, which is expected to face challenges that could impact overall profitability. In detail, Disney reported a profit in its direct-to-consumer segment, turning around a previous loss of $587 million to post $47 million in operating income. Yet, the overall segment still recorded a loss of $18 million, a stark improvement from the $659 million loss a year earlier, but not enough to alleviate investor concerns entirely. Additionally, Disney's financials were impacted by a substantial $2 billion impairment charge following its strategic decision to merge its Star India business with Reliance Industries, a move that indicates shifting strategies in its international market approach, but also adds a layer of financial complexity. Beyond Disney, the broader market sentiment has been buoyed by a strong earnings season. Over 80% of companies in the S&P 500 have reported results, with the majority showing resilience in the face of ongoing economic pressures such as sustained high inflation and elevated interest rates. This earnings season is shaping up to be particularly robust, underscoring the adaptability of large corporations to navigate through turbulent times. Looking ahead, the market's attention will increasingly focus on the Federal Reserve's upcoming decisions. Insights from Fed officials, particularly those like Minneapolis Fed President Neel Kashkari, who are scheduled to speak soon, are eagerly anticipated. Their perspectives will be critical in gauging the future direction of monetary policy, especially in terms of interest rate adjustments. As we move forward, the interconnections between macroeconomic indicators, corporate earnings, and Federal Reserve policies will remain key drivers of market activity. Investors continue to monitor these elements closely, seeking to adapt their strategies to a financial landscape that is continuously evolving. This landscape is not only shaped by domestic factors, but also by international developments, including geopolitical tensions, global trade dynamics, and other international policy decisions that have far-reaching implications for the markets. In conclusion, while today's market gains reflect a general sense of optimism, the nuanced reactions to individual corporate developments, such as those seen with Disney, highlight the complex and interconnected nature of financial markets. As investors look to the future, they remain keenly aware of the challenges and opportunities that lie ahead, navigating through them with a careful blend of caution and strategic foresight.